Alrighty, guys, we are live. We are live. Good morning, guys, or good afternoon, depending on where you are. If you're in the down under, just like me, then good morning. And if you are the up over, good afternoon. Um, we are in today's session, guys. I want to do a technical analysis of the FANG stocks. All right, so I'm going to be looking at the FANG stocks today. I'm going to and I'm going to be I'm just going to be looking at the FANG stocks today and just doing a bit of an update on the FANG stocks like Amazon, Apple, some of the big FANG stocks out there, and just give you a bit of an idea of what's really going on with those as well too. And then I'll be happy to answer any questions we have with that. So that's what I want to cover in today's session, guys. Let me get straight into it right now with the typical disclaimer, and then we will get started. I'm really grateful to have you guys, and I'm really grateful to have you part of my community, and you attend my YouTube channel, and to be part of what I do here, and be part of my life. So I'm really grateful for you, and I really appreciate your support when you thumbs up, when you subscribe to my channel, and thanks in advance, guys, for everything that you do, because it really supports me, and I'm really grateful for that. I really do. And because on a default, guys, when I teach what I know, it actually helps me as a trader as well too. Helps me get better and better and better each day. So I'm really grateful for that, guys. Let's actually get straight into it, guys. Guys, before I start today, do not place a trade based on what you're seeing in today's session today, because trading is risky. There's no guarantees of making a profit in the markets. It takes a long time to become a good trader. So this session here is just me just helping you understand what's happening right now in the FANG stocks, and just to give you some education. I'm not telling you to go out and trade any of these stocks right now. And if you do go trade, just make sure that you're protecting yourself and having good risk management. Also, guys, if you haven't done so yet, make sure you go down to mastertraderlab.com, because I'm giving away a free trial to the Master Trader Lab. Essentially, you can invest thousands of dollars on different courses, from chart reading to trading systems to mindset and so much more. But I've decided to create the Master Trader Lab that teach you it all at affordable price at $6.99 per month. But I'm also giving you a free trial as well. So if you haven't done so yet, guys, go down there, get the free trial. If it's not for you, let me know. You'll never be billed. And if you're happy to say that it's $6.99, plus also I've got some awesome cool bonuses that I'm going to be launching soon, and you'll be able to see that in the membership area in the Master Trader Lab. Let me have a look at let's get straight into the FANG stocks now, and I want to walk you through these because a lot of things are happening in the markets right now, and we could be forming a top right now in the markets, and we could be seeing that. So one thing, I want to start with Amazon first, the big daddy, one of the big daddies anyway. So Amazon. So let's start with Amazon on the weekly chart here, and I want to squeeze my weekly chart up here with Amazon. And Amazon, first, let me go to the monthly chart first, and I want to share something with you. Isn't that interesting? Look at that. Look at Amazon over the last pretty much decade. Isn't that just insane? Amazon went from, like, right over here was the tech bubble in Amazon. And and as you can see, right, you can see how right over here, that was the tech bubble, which is crazy, right? Like, which was just let me go over here. So if I move over here, this whole thing here was the tech bubble. Now, how do you identify a bubble in the first place? When something goes up pretty vertically, see how this thing just shot straight up? It went from $10 to 100 within a matter of half a year. And then look at this here, made a big, massive double top, didn't it? See that big, massive double top? This is the monthly chart here. And then it came down, didn't it? So the reason why I'm bringing that up is because if we have a look at what's happening right now, is we can just see an enormous move on the upside with Amazon, right? Just an enormous move. So over the last, what's that? 1, 2, 3, 4, probably 4.5 years, we've gone from 300 up to pretty much 2,000. That is an astronomical growth in Amazon, just an immense growth. And it's, and if you saw the news about Jeff Bezos' wife divorcing him and stuff like that, or that them getting a divorce, she definitely got the divorce at the right time, right? Before Amazon stock comes back down to like 900 or 700 in this next recession. So in the next recession, Amazon is likely to do at least a 50% retracement, right? From this entire move up from the low to the high, I would say. So this sweet spot right here from 1,000, it's just a cycle thing, right? In the next recession, you could see Amazon come back down to maybe 1,000, maybe here more, maybe even a lot deeper. Maybe it's going to come back down to and retrace pretty much where this vertical move started. So as you can see, right, we had this big vertical move to the upside, and now we're just going sideways. So that's the bigger picture there, what we're seeing there, guys. If I look at maybe like a bit of a short-term chart, or should I say, if I look at and I see some trend lines coming into play, I do notice that there's that one there. Let me go to the weekly chart here, and I'm going to go to the weekly chart. And what I'm going to do is I'm just going to look at the main parameters in the markets here, the main sort of levels here in Amazon. And I'm going to bring that up through there. I'm going to bring that up through there. And I'm going to bring that up through there. There's nothing through there. So I'm going to start at this point here. And I'm going to then draw that up through there, and bam, look at that. Look at that. So we know that's relevant, right? We know that's relevant to the market. So whenever I'm drawing my trend lines, I'm not looking to draw it where I want to draw it. I'm looking to draw it, so, okay, where is the most touches? So what happened there? Where's Amazon? Amazon disappeared on me. Come back, Amazon, right? So as you can see, right, like I drew that trend line from there to there, didn't I? See how it's only had one touch, and that was it from here to here. Even if I draw it in a bit closer, see how it's only one touch. But if I delete that trend line and then I start at this point here, so I started from the very low point and then I drew it up. I'm like, okay, we can't start there. Let me start at the next higher low. And as you can see, right, this next higher low through here was the one that gave this really, really, really significant trend line through here. So I could even draw it down from there to there. And we could draw it in from there to there, couldn't we? Which is, look at that. Look at that. Pretty much spot on through there. Right, so this line through here, and it's not an exact finite number, is it? It's more like an area in the market. So if you look at that, if I go to edit this and I'll make this a bit more thicker, we know that, right, this whole sort of range of this line here is a pretty significant line in the markets. And so we can see that there, right? A higher low, a significant higher low through here, significant higher low, significant higher low, and then the market ran up, came down, came back up. Notice how we're creating. Notice how we created this high through here. So if I draw another trend line from this ultimate high point to this low point, notice how we're squeezing up into like a bit of a triangle pattern now in Amazon, which is really interesting, right? So we're squeezing up. We've got this pressurizing up through here, and we've got this squeezing up through here. So I wouldn't be too surprised if Amazon maybe filling this a bit more. Now, when we're looking at Amazon's long term here, you can see how that once we start to break this long-term line through here, you can see how that's a change in momentum. The momentum has stayed above this line all this time, even through this nice decent pullback we had towards the end of last year, and then a nice bounce this year. If we look at this, if we squeeze this right up, right, we can see how if Amazon starts to break below this line through here, well, then we know, right, that it's losing its momentum for the last, say, half a decade. And that's when we're likely to start to see a complete change in trend. And we also can see how we actually had a bit of a low point through here too. So if I draw a trend line from there to there, actually, you know what? Let me go to the daily chart. I'm going to go to the daily chart here and see if I can identify anything through here. It's probably through, but it's only one bounce, isn't it? It's not really, there's no real true strong. I like to have lots of bounces. So, you know, I'm just going to keep it through there. So we can see that that's what's happening right now with Amazon, right? We're squeezing up into this, a bit of a squeezing up through here, but then we're squeezing up into, and it's not an ascending triangle pattern. Ascending triangle pattern is more pressurizing to the high side. Meaning we have a resistance line. We generally have a resistance line coming through here, and then the market pressurizes up. This one here is more squeezing up through here. So I wouldn't be too surprised if Amazon just kept filling in this in here for the rest of this year. And then if the recession does start, or we do start to see the next downturn in the markets, then then it would then that would spit it out, John. that then Amazon would probably start to see that nice downturn from there. So on a daily chart, guys, on a daily basis, Amazon is pretty ugly here, but we are still pressurized. We've got a low here, we've got a nice higher low, we've got a nice higher low through here as well too. So we are pressurizing on the upside here, but the bigger picture is we're squeezing up into this overall pattern through here, and knowing where we are right now, and knowing that this last pretty much half a decade, right, we've had an enormous growth through here. It's not surprising to see pretty much Amazon doing nothing for maybe 12 months or more, because it's just taking a rest, because people who did own it back in 2008 and now obviously enjoying the ride. If we is there any chance we could buy a 10-year put option? I mean, like a 10-year call option or 5-year call option. So that's what I'm seeing there on Amazon, guys. So let's go and have a look at Apple. All right, let's have a look at Apple, and let's just go do the same thing through Apple, and let's go have a look at these monthly charts. Monthly chart, once again, guys, we're looking at these monthly charts because stocks have a memory, and it's really fascinating how these works, right? Like, so these stocks have a memory. So if I connect from this low point, and then I connect, and I'm just going to draw that up through there. Notice how we have pretty much that line through there. Notice how that line through there is a pretty evident, a pretty relevant line, right? We had a low point through here, then we had this low point through here, and then we had this low point through here. So if I make that a bit thicker, and I keep that on the charts, if I just leave that there now, and then I go back to my daily charts now, and I squeeze it up, if Apple ever gets back down to this level through here, guess what I'm expecting? I'm expecting some sort of a support, because that's that long-term support line coming into play when it comes to that longer term support line through there. Let's go back to that monthly chart again. And once again, we can see even with Apple, right? We can see Apple how it's had we actually see how this was actually channeling. See how this was channeling really nicely. Look at that through there, right? So it's more like an area. It's not an exact finite number, but notice how this overall monthly chart, right? We had this resistance, came down, found support, resistance, support. Once it broke back above it, notice how we're finding a lot of support even recently, right? We came back down to, now again, this is a monthly chart, so it's more like an area, more like a band than just a finite level. It's not like it came down and, oh, this is the exact point. It's more like an area, as you can see through here. So if I go to the weekly chart, you can see how this area through here was indeed a support level to the markets there. So we can see that through there. I also can see that's on the monthly chart there. I also can see that there's probably a trend line coming up through here somewhere. So we started to see a bit more of a steeper descent, didn't we, through here? And isn't that interesting? If I draw that trend line through there, and let me make that a bit more thicker. Isn't that interesting? Let me make that really thick. Actually, I'm going to take this off the. This off the charts now, because I don't want too many lines on the charts. But as you can see, right, look at this here. Bounce here, almost bounced. All this support level. Look what happened here. As soon as Apple came down and broke this level, look what happened. Came back up. We rallied up strongly, didn't we? Look where it bounced. Look where it found resistance. Right out that level through there. And then we came back down, and look where we are right now. So what's happening right now is we're really in a bit of a, so if I draw a line through here now, we don't really need that line on the chart because it's not really going to do anything. I do see that we probably have something going on through here as well, meaning like a level that that the market can sort of look at. And there we go. We can have that line through there. So if I make that, once again, make that a bit thicker, and we'll make this one here a bit thicker. What we're looking at here, right? We're looking at how what's happening with Apple right now, right? We had this resistance through here, which came off that sort of support line. And as you can see, right, these stocks have a massive memory. Like this line that came back through here on this weekly chart, if you're just looking at a daily chart and you saw Apple run up through here, you'd be like, oh, how come Apple stopped through this level through here? Well, if you look at that weekly chart, right, once again, I'll draw that trend line here and here just for this sort of the educational purposes to help help you understand this thing here. If I draw that trend line back in, right? Again, it's more like an area, isn't it? It's not a finite level. It's more like an area, and I make that purple. If let's keep it that level. If I go back to the daily chart, right? As soon as Apple ran up through this level through here, right, we would know around this level through here on this weekly chart, we're likely to find a lot of resistance. And that's the importance of looking at those longer term charts with those longer term lines, right? Because when they come down, it's fascinating to see how much these markets, how much the market supports these long term trend lines, and how good the market is in memory. Like the market might, like if I look at this here, the market is pretty, this long term trend line through here that I've got, this one down here, then the market spent pretty much a couple of years away from this line here. But when it gets down to here, right, you watch, right, it's probably going to start to find a bit of support here. We'll get a bit of a bounce. And I'm not saying that it's going to turn into a bull market there, right? But we're probably likely to get a bit of a bounce and then maybe a continuation on the downside. So, but look at it through here. Look how this weekly chart, right? We came down, lower high. We're in this small little downtrend, and look what happened here. Came down, found support, found a little higher low, and we started to pick back up. So, just fascinating stuff, right? See how through here. If I go back, let's go through to here. I'm trying to get that. Look at this thing through here. So, right, so the market came down to this level, down. What do we have here? We had a low. We had a double bottom through here. This is a double bottom all through here. We broke through this resistance through here. And as soon as we broke through this resistance on this weekly chart, guess what? The new trend started, right? It started a nice little higher low. Look at that there. Nice pullback here and a nice bar that stands out off a nice pullback. I love that sort of setup there, by the way, guys. When you have a nice pullback off when you get a nice bull market, we get a nice upward movement, and then you get a nice pullback here, and then you get a nice bar that stands out. It's generally a really, really good trade through there. And on top of that, guys, actually, before I forget, some people have been asking me about how I trade the markets and stuff like that. Just before I forget, guys, if you do want to learn my #1 trading system that I've traded now, and it's the most powerful trading system, most highest probability trading system on the planet over the last 15 years of my trading, then go to johnsfreetraining.com, and you'll be able to see the free training. You'll be able to see my trading strategy and how I trade the markets. So some people have just been asking me that. So let's get straight back into it now. Look at this here, right? So we had a low, lower low, lower low. And look where the market look where the market changed tune, right? We came down, we had this low, market came down through here, we had this lower low. And then guess what? Look what happened here. What is this here? This is a slight high low, isn't it? But notice how when this market made a slight high low and then it broke through this previous high, notice how that's when the market started to change back into a bull market. So that's why it's important to really, really keep an eye on these longer term charts, right? These longer term charts really do give you a bit of a sign of what the overall market's doing. And so as you can see, right, we came down, made this high low, the buyers are coming back in, broke through this previous high, and that was sent the market back into a big, another bull, what's the word for it? Another bull market through there. So very, very fascinating, guys. Very, very interesting stuff there. And as you can see that these longer term charts really, a lot of people focus on the daily charts, and there are like, I like the daily charts. Okay. That's what I trade. I trade the daily charts, and I get in and I get out on the daily charts. But some of the most powerful stuff to get the overall direction of where the market's likely to go, or what's happening with the overall, those weekly charts really, really, really does give you a sense of what's happening right now. So really interesting stuff happening here with Apple. Apple very similar to Amazon. What we're seeing here with Apple is we're getting a compression now into this triangle pattern here. So if we do if we compress through here and we start to like continue through here, if we break this line through here, then we're probably going to head back down to this bottom line through to here if Apple does break that. So that's what I'm looking at through there. Let's go and have a look at now some of the other stocks through here. So let's have a look at Facebook. All right, let's have a look at Facebook, and we'll have a look at Facebook long term. So Facebook's been really interesting, and this is something here. Look at this here from a weekly perspective. If I draw a trend line, look at this thing through here. If I draw a trend line and I draw it up through there, right? I'm going to draw. I notice that there's something through there, isn't there? It's more like an area, isn't it? There we go. It's more like an area. Now, what am I doing here, guys? I'm looking at more of the closing points here. So when I'm doing my analysis here, guys, I'm looking at, say, okay, what's the bigger picture doing here with Facebook? The reason why I drew the trend line there and not the wicks, notice how I'm using more of the body and the closes. So notice, say, for example, this point started through here, and it couldn't close below, it couldn't close below, it couldn't close. Look, notice how the market came down through here. It actually gapped down, like rallied back up, couldn't close below, right? It's more like the bodies than the actual wicks. The bodies, because the closing price is the most important price to any bar on the chart, right? It's not the, it's sometimes it's the wicks, but it's more the closing price. Notice how the market actually came down through here, right? We had a little bit of a break below, but came back up. So majority of the time, it couldn't break below, came down through here, couldn't break below, couldn't break below. And look at this here. Look what happened just recently to Apple. And this is why it's so fascinating to look at these longer term charts, because the market can rally up. And look what happened just recently to Apple. It rallied up for a while, but around that area on that longer term chart, we had a bit of a pullback, didn't we? We had a bit of resistance through there. We wouldn't be able to see that if we didn't know that that long term line was coming into play. So there is, I am also seeing that's the similar things, guys, to what's happening through here, right? So we're seeing, we've got obviously this downward movement through here with Apple. And let me take this off the screen now. And I'm also seeing there's also something else going on through here with Apple. I'm trying to see what I'm just trying to see what's going on here with, sorry, not Apple, Facebook. So I'm trying to see what's going on here with Facebook right now, and it's not really a trend line. Let's see through here. So do we have, is that through there? So we could have that through there. See, as you can see, right, what I'm looking for right now when I'm doing my analysis, I'm doing this live on the spot, by the way, guys. It's not like it's a pre thing. So what I'm looking for, once again, I'm trying to find the most relevant trend line. It's not the trend line that I want to draw, but it's more like the most relevant trend line. We can have support and resistance lines going on through here and stuff like that. But I'm trying to see. I like to use these. I do like to use these sort of support and resistance lines. They're good and they obviously are valid. But I like to use these sloping lines, so sloping to the downside and sloping to the upside, because they're what I call momentum support and resistance lines. Momentum support and resistance lines. And the reason why, right, is because as the market is going up, the market is picking up momentum on the upside, and if it's staying above these lines on a sloping line instead of a horizontal line, then it's more like a momentum support and resistance line. It's showing you it's showing you where the momentum is. If it's staying above that line, then obviously momentum's still strong in that market. And if it starts to break below that line, then we know that momentum is weak or whatever, right? So that's the reason why I really do like using more of I do like to use these lines through here, the horizontal lines, but it's more like a sloping line for me personally. And so let me just draw that through there. All right, that'll be the line. I think that'll be the line. Yep, that's the one for me. That's that line for me. So as you can see, right, I really had to spend a bit of time trying to figure out where that line is for me, but that's that line. That's the one there. So as you can see, right, we had a lot of resistance all through here. We had a lot of resistance, and then we came down, found a lot of support through there. And then isn't it interesting that angle through there was exactly smack on where that came through there. So really interesting. Again, Apple's doing the Facebook. I keep calling it Apple. Facebook is doing that same thing too. So I wouldn't be too surprised if we continue to compress up through here. We did have this big move up, but Apple's looking really on a short term, guys. Apple's looking really ugly, very gappy. I'd personally, my recommendation to you is to stay away from Apple, because it's very gappy at the moment, as you can see over the last sort of 12 months, and also it's very ugly. I mean, there's a lot of gaps, and it's not a very smooth flowing chart. So I would personally stay away from Facebook there. And let's go have a look at just a couple of more here, guys. Let's have a look at Microsoft, because I know Microsoft has just been absolutely towering. So Here's some pre-lines that I've done with Microsoft here. So let's go back to this monthly chart, big long-term monthly charts. And what do we have here? Look at that. Look at that. Isn't that just enormous? So if we have a look at this through here, okay, we see this long-term trend line that I've got through here on this monthly chart. If I take everything off the screen, look at that big vertical move up. What do you think this last move on Microsoft is? If we've already had a big, massive move up and then we had a little pullback, and now we're having another big run, what do you think this is up here? It's probably going to be more like an exhaustion move, right? Like one last push, especially when we get all the other tech stocks just really just settling down, not doing much. So as you can see, right, what I was saying before about this line through here, see how it's more like a momentum line? If it's staying above it, right, the momentum is still strong. Now, you also can see how that the market has actually pretty much gotten away from this line through here. So you would expect this market to have a bit of a retracement, come back down to this line here. Again, I'm looking at the monthly chart here, so more of like a longer term chart. So that's that long-term chart through there. But if we're looking at the next correction, and you can see how, once again, these momentum lines really do start to tell you when the overall market is starting to change tune. So if I draw my trend line back here, I'm going to look at the tech bubble days. As you can see, right, on the tech bubble, that's that line through there. So notice how through this tech bubble, notice how we came down, found a lot of support, found a lot of support, found a lot of support, ran up, came back down. And notice how when we actually broke below it, we came back up and tested it as resistance. That line started back here in 97, and then it was like in the middle of 2000s that it actually found resistance through there. So that's the power of these longer term lines in the markets. And when you're looking at the overall bigger picture here, so let's go back to that weekly chart here. So as you can see, right, this sloping line that I got here, what is it? It's a momentum support and resistance line, because it's showing momentum is still very, very strong to the upside. And as you can see, right, we came back down, and look at this here. Started through there, almost sort of a support through there, rallied up. Look what happened here in the October. The October came right down to where? Right down to that support level, and then rallied back up again as well too. Very, very, very fascinating stuff. So if the market comes back down through to here and holds this level, well, as you can see, right, the weekly chart is still in a nice upward movement, nice upward trend. When we start to break that level there, in this overall next downturn from the low to the high point, then we could start to see. Let's go back to that monthly chart here for a minute. Wow, isn't that just, look at that. This looks like, this chart here looks almost identical to what Bitcoin did before it actually peaked out and retraced like 70% over 12 months. So really, really fascinating. Bubbles are when you start to see things go vertical on the charts, guys, you want to stay away from that, because and you want to stay away from the hype as well too, because when something goes vertical and just takes off like a rocket, everyone gets hyped up about how much it's moved. They think it's going to continue like that. They get into the sucker rally, right? They get into the last sort of movement, and then the market continues to fall down. So that's what I'm seeing through there for Microsoft, guys. Once again, on a daily perspective, I do see that there is probably something going on through here. So I'm seeing this line going on through here. Let me just make that a bit thicker. So I do see on a shorter term basis, we do have this sort of momentum line coming through here. You can see how we actually had, once again, like even when you're looking at this market moving up, come back down, and then it's rallied back up. I wouldn't be too surprised if we started to falter through here, and see a bit of pullback. If we start to break this level through here, if we do turn around, and this is more of a bit of a bull trap, or yeah, like a bit of a false breakout, then I do see this market's probably likely to break down through to here. If the market does start to break below this long term, or this sort of short term here, momentum support and resistance line, then it's probably ultimately likely to head back down towards this level through here, where we're likely to find a bit of support in the markets. So there we go, guys. There's just a few stocks there. Obviously, I could keep going through a lot of them there, but I wanted to give you just a few of them there. You know what? Let me just add one more. Adobe. All right, let's have a look at Adobe and see what Adobe's been doing. I haven't looked at Adobe for a while because it's just been okay. So one thing I'm noticing about Adobe automatically is this: is that notice how Adobe ran up. This was the ultimate high point, wasn't it? If we look at this weekly chart here once again, notice how Adobe actually had this high point up through here, and then it rallied up, and then it broke just back above it, and now we're just going sideways. What does that tell you? That tells you, right, that this could be a bit of a final push in the markets before we see a nice downturn in the markets or a nice pullback. This could be one last push, right? Because you see that happen, or you see that happen so much, and it's called that's the analogy of a false breakout. Let me bring up my snagger tool here, and you see it so many times with these false breakouts. The market will run up, make a high, come back down, run up, make a slight high, break back above it, not do too much. Now, when this market is breaking back above a new high, you would expect, right? Like, oh, 52-week highs and stuff like that, all-time new highs. You would expect that to be a good thing, right? And expect the market to then just to continue. But what's the psychology if it breaks up to a new high and then just does nothing, goes sideways? It's like, oh, guess what it's doing? It's probably likely to get people long because it's still up to a new high, and I think it's going to continue. Then if it does start to break back below that low through there, that's when you probably could see at least a 50% retracement of this entire move up, 50 to a 60% retracement. It's not saying that it's an end of trend move, but it's not a complete end of trend and we're going to completely change the trend. But that false breakout happens there, and you see it so often. And so same for the downside as well too. This what happened. I remember seeing this happen in 2016 in silver and gold and I think it was the silver and gold miners as well too. The market came down, found support, found a bit of support, and then it broke down. I was like, oh, okay, cool. Look, it broke down. It looks like it's going to continue down, and then went sideways for a while, broke back above. Guess what this is here? It's a false breakout, right? Because it was breaking support. When it breaks down, it's like, oh, at this time when it does break down through here, there are things you can use to say, okay, well, it's likely to be a false breakout, and I'll teach you that later on. But just rest assured that if the market does break down and then go sideways and then breaks back above there, that's likely to be some sort of false breakout in the markets. And if that happens, then this is more like an end of trend move. And then the market's likely to then continue back up and sort of change the tune of that, at least for a short term. So on Adobe, if we start to break back below here, then we could see then, okay, let's go back to here. Let's go back to those longer term charts. And there is a long-term trend line through there, isn't there? That's that one through there. Look at that through there. Right, so that's that longer term trend line. So would be really interesting to see what Adobe does through this longer term line through here. Now, what is this longer term line through here? Let me just extend that to the right. This is the long term momentum line, isn't it? So if we do create some sort of a false breakout here and we break here, and especially if we start to break this line through here, what is that telling us? That the long-term momentum of this stock has now changed. It's now changed from continuing to step higher, rally up, look at it, rallied up, came back down to it, rallied back up. So if we break here, that could be a long-term change in the momentum to the upside, and potentially a change in the what's the word for it? The overall trend in the direction, the overall trend in that direction as well too. So really interesting to see this, guys. If we do start to see a bit of a false breakout, I wouldn't be so surprised to see. And let's go back to that daily chart there, which again, a lot of these tech stocks, like same with Adobe, guys. Like the reason why I stopped looking at Adobe was because of all this. Look at these here. It's just very ugly, isn't it? Like very, 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 very volatile times, guys, in these markets. And so I like my recommendation for you guys is I like to trade stocks that have good flow to them and not like this here. Very ugly, very volatile. Looks like it's going to go down one day and it whips up against the next day and all that sort of stuff. When a stock starts to do this, I just try to stay away from it because it's just really, really, really just very, very, very unpredictable, and it's likely to whip you out as well too. So just on that thing about false breakouts, guys, let me share with you some things here, because I noticed I just touched on the topic about false breakouts. Let me show you a few charts that I've taken over this year where I've noticed false breakouts and stuff like that. All right, so let's go through here. Right, so here was one chart that I noticed. This one here was on MGM. Look at this false breakout here. Notice how this market came down and had this support through here, and it had support. Notice all the support through here, and then guess what? And then notice how the market broke below, right? The market came back down through here. So as the market broke below, right, you're like, oh, this is now likely to continue down, isn't it? It's now likely to continue down. And then guess what happened? And then we got a complete reverse candle, didn't we? Got a complete reverse candle. And what was this candle here? This green candle closing back above was what? Telling us now that this whole down move here was a false breakout. So if you were short on this breakout to the downside and you saw that the next day, that would tell you that not only should you be out straight away, but this is now likely to be a false breakout. And when you get a false breakout, it's more like of an end of trend move, and then that continues. Here is another false breakout. This was on a 5-minute, I think this was a Forex chart. Notice how it broke past the low. So it had all this support, broke past support, and then straight away came right back up again. What is this candle right here? What is this? We broke past support, which is now, okay, we're now likely to go down. And then the very next candle came straight back up again. What does that mean? That's what it means that now this is a false breakout. When we get a false breakout, especially when we're in a bit of a channel, and as you can see on this chart here, we're in a channel here. And you see this time and time and time again with the markets here. So you can see how that we actually had this overall, this was the channel going on through here. So notice how we had that channel through there. So that's that channel through there. So if the market's gone through a bit of a channel like this, how it has been through here, this is even a 5-minute chart, it breaks back below. It breaks below here. And then this green candle here closes right back above it. That tells us that this is a bit of a false breakout. And now we're likely to run back up to the top of the channel. And that's exactly where it ran to pretty much straight away. So really, really, really interesting stuff there, guys. It's a false breakout. And when you see those channels, and just one last chart here. Here we go again, right? Look at this here. Look at all this support through here. Support, support, support. The market broke down. And once again, let me bring up, this is a 2-minute chart. So it's the same thing on every market. This one here was a futures chart, I think it was. So notice how it broke down past support and then came straight back up again. So notice how we had all this market come back down, and then we had a big strong candle break back above it, right? Broke back above, see this support line through here. What is that? That's now confirming this to be a false breakout. And what do I say when we get a false breakout? If we can see any identification of any sort of channel through there, and I do notice that there was probably a bit of support and resistance through there, right? I would say that at that point through there, now it has a very good chance of getting back up to the top up there. Now, I'm not telling you to trade that, guys. I'm not telling you to trade. Like, you probably could, and if you did see something like that, guys, and you did see the market finding a lot of support where it is right now, and then it had a false breakout, you'd probably be 80% right, meaning 80% where it's likely to go to, and so on and so forth. You can see how it got there, it overshot a bit more. It actually got up to the top up here and then found a bit of support. So, but you can see here, this false breakout it broke past support for a while, went sideways, and then came right back up again, closed back above that line. That green candle there was indeed the signal for you to say, this market here, whatever market you're looking at, this market here has now just created a false breakout to the downside. And not only is it now likely to be more of an end of trend, so if it's been going down for quite some time, like we have been seeing through here, been going down, 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 pretty much down. But not only that, but we're now likely to see a nice move back up, and we're now likely to see a move back up to the next significant resistance. And that line through here would be that line for me. So if I was looking to trade that, which I don't, but if I was looking to trade that, my stop would be at the low here. and then my target would be up here. So that looks like it's a good, say, 2.5 to 1 risk to reward ratio. And that system there works, guys. Like if you trade just that alone, you'll be able to do well. Just bear in mind, guys, that you just got to be disciplined. If you did trade something like that, it's more about the consistency of doing that. You took this 10 times, 3 times out of 10, you're probably gonna it's not gonna be false breakout. It's probably gonna run back down and stop you out. And then 7 times out of 10 is probably going to get to your level there. And if you've got at least a 2 profit to your 1 risk, and you take that 10 times, that equals, at the end of the day, starts with P and ends in profit. That's called profit. So that's the key to any system there, guys, is just taking the same thing again and again and again. So yeah, I just wanted to bring that up for you guys, because I do know that I just touched on that subject, such as false breakouts, and I did want to just share with you some. I take a lot of whenever I trade the market every day. So whenever I'm trading the markets simply means I'm scanning the markets, I'm looking at the markets, I'm looking for my setup that I trade. And whenever I notice these things, false breakouts, and oh look, the market found support here, and interesting things that I find about the markets, the patterns that I see in the charts that repeat themselves again and again and again and again and again, I notice those things because I haven't been able to, like, no one has ever taught me about how to notice where the confirmation is, if it's a false breakout. What does the false breakout look like? These is just charts that I take because I notice these patterns happen time and time again in the markets. And so that's what I wanted to share with you guys with that. And yeah, so hope you guys enjoyed that. So whenever you're looking at a stock, guys, and same for the upside as well too. I just haven't got any lot of false breakouts to the upside. But actually there was one recently, as I'm doing this session for you today. There was one, if I have a look at the, was it the S&P? Yeah, I think it was the S&P. So look at this here on the S&P 500. Look at this weekly chart, and you'll notice that it actually happened a few times, didn't it? So if I go back to this weekly chart, actually let's go back to the, we'll look at the daily chart, and we'll go back to this period, this downturn here, and we're going to go back to here. So notice this point through. Notice this last. You know what? Let's go to the weekly chart, because I think the weekly chart really gives a much more an example of what I'm trying to teach you here, what I'm trying to share with you here. So if we go back to here, right? So we had this high up here. Notice how we had this high point. What's that through there? I wonder. All right. Notice how we had that high point through there. So we had that high point through there. Oh, that's that Fibonacci level I thought there. So notice how we had that high point through there, right? So at that time, looking at this weekly chart, what is this market doing? Pretty much doing nothing, right? It found resistance. That was the ultimate high, came down, came right back up. See how it broke back above it? And then it broke back above it, did nothing the next week. Did nothing the next week. So this actually, see how this is actually looking more like Adobe, like I just shared with you just then. And then it did, and then look at that there. That breakdown, what is that breakdown candle? That's telling us now that whole thing here was more of a like a, they call it a sucker rally, or what we call a false breakout. It's break back above. That's just the high point. And again, there is a sign here to tell us that where that's likely to be, and I'll teach you that later on. But just recognize that if it does do that and we start to break down, then we're now likely to see what? We're now likely to see, what do I say? If the market breaks here, we're now likely to see what? At least a retracement back down to the next level of support or resistance. See how it's channeling? And if I bring that up through here, well, isn't that just fascinating? Look at that through there. Almost, this candle here, almost within a few dollars or so, came back down to it. And then it came back down to where? This long-term line. Forget that line through there, but that long-term line, and then bounce back up again. Now, look at that. Isn't that interesting? Look at this here. So we had a break to the high up here, went sideways, broke down. What does that mean? It's probably like a false breakout. Notice that we had a lot of choppy movement, didn't we? Again, this is a weekly chart, a lot of choppy movement. But look what happened within a few weeks. 1, 2, 3 weeks, came down and almost hit that level there. Then it went sideways. We had a lot of support. Notice how it broke down through here. So notice how the S&P. Let me zoom in. Let me zoom it in where it is right now. Notice how they've had this big breakdown candle past this support level. And then what happened? 1, 2, 3. This candle right here closed back above it. What does that mean? This is now back above that level. That now tells us that that was a false breakout. And where's it likely to run to? Back to the high point. And isn't that interesting? It actually ran right back to that resistance point right there and then stopped. And that's where we are right now. So this actually had two, if you're looking at it, this had a break to new high and then break back down. A lot of support through here, didn't it? A lot of support around this. It was more around this whole area through here, wasn't it? When you're looking at support or resistance levels, more like a whole area through here, broke down past support. And then as soon as it broke back above there, look at that. That was the change in tune, right? Like we went from a downtrend and then this breaker back above here. Notice how the very next candle here, notice how the very next candle came down and found support. This is a weekly chart. So it came down, found support, and bounced back up. If I go to the daily chart now and show you what that looks like on a daily chart, you'll be able to see that. Run back down, run back up. Now, if this was going to be a bear market, then we would expect the market to rally back up to resistance here and then break back down, right? So if it's going to continue this downward leg. Due to the fact that we didn't, notice what happened. Notice how we actually broke back above it. We broke back above this supported zone, went sideways, didn't we? We got back above it. So this whole big move here was more like a V bottom, and then the market started to run up through here. Fascinating stuff. But the support of the false breakouts generally come when it comes to new highs or new lows. That's when you see them, and also when you start to see channels that form into place. So more like horizontal, more like especially when you start to see channels like as I was sharing with you a minute ago about the false breakouts, right? So let me just share. Right. So for example, like this one here, I shared with you, like I shared with you a minute ago, right? So sideways, more like a channel basis, sideways range there. There was one here that I've got. I'm just looking at my other screen here. Look at that there. So here we go. Here's another one. Right? See how this stock, this is the daily stock, daily stock. Notice how it's FTCH. Market came down, went sideways for a while. Daily chart. See how it broke below. This level through here, as you can see, right, is like, is that now going to continue down or is it not? At that point, right, as the market started to break back above it, look what happened. Okay, it broke back above it, went sideways. See how it actually went sideways, right? So it broke back above it. But what do I say? What do I say when the market breaks, when the market does create some sort of a false breakout? Comes back down through here, gets back above, which is now right through here, confirm the break above. It actually didn't go straight up, but it came down, found support, and then where did it run to? Ran straight to the next resistance line. See how this is just a repetitive pattern again and again and again and again. Once you start to really dig deep into the psychology, see, and notice how all this has everything to do with the market itself, the charts itself, and not the volume and the moving averages and stuff like that, because there's so much power that the market is really giving us a lot of signs of, are we overextended? Who's in control? Where is momentum? Is this a false breakout? Is it likely to be a false breakout? And all of these different things, right, come into play just from the market itself. And it's so powerful. And that's what I personally spend most of my time on, is really digging deep, and I've done for a long time now, is digging deep into the market itself, the charts, and these patterns that happen again and again and again and again, right? I've just brought up 4 different charts about the false breakouts, and you can see how that works. Now, if it's not going to be a false breakout, the market would rally up through here, hold support, and then continue down. That's exactly what gold did. Let me bring this up through here. That's exactly what gold did before we had a nice movement down that was at the start of the middle of last year, right? So if I go back to gold, here, and I bring this up here, what do we have through here with gold? This is now looking at a daily chart, right? So we had this point. So see how we had this resistance through here. Where is that? All right, so I want to take that off the screen there. So I want to zoom back in. So notice how we had a channel, right? All right, so we had a channel that gold was in for January, February, March, and April, pretty May as well too of last year. So we identified a channel. Then guess what happened? The market then what? The market went sideways, found support as well too. So notice how we got a real strong support, right? And then we got a breakdown. Okay, so now we've got a breakdown. There's two scenarios here. One, this breakdown is going to continue, and if it is likely to continue, where is it likely to go? Where is it likely to go? All right, so there's two questions there. One, is it a false breakout? And two, if it does continue, where is it likely to go? So where the projection of these channels here, if this is not a false breakout, what you do is you measure from the high of the channel down to the low of the channel, and then what you do is you project that down and you measure that from there to there, and that level through there. If this is not false breakout, then this is where it's likely to go through to here. And then if it overshoots, we can see that there's a little bit of support and resistance level back through here. So, right, so we're likely to get down to here. But the first target for me is that if this is not a false breakout, is that that's where it's likely to go. Now, how do we know if this is going to be a false breakout or not? We don't know yet, right? But look what happened. Look what happened afterwards. We did what? We actually just started going sideways, didn't we? Notice how we went sideways? Now, look what's happening now. Notice how we're calling back up, aren't we? This now could be what? A false breakout. Now, what are we looking for on this chart to say this is now a false breakout? We're looking for what? We're looking for a nice candle closing back above it, right? Like that, getting back above this line through here. Now, if we see that, the next question is, if we see that, where is it likely to go to? Back to the top up here. See that? So it's not only once we see this is where it's likely to go. So let's delete this. Now, if it doesn't do that, and then we start to do something like this, what does that mean? That simply means that it wasn't a false breakout. It was just a nice test of resistance, and now we're continuing down. And if it does continue down, where's it likely to go down to? Here. So again, this flowing with the market. So let's see what happens through here. So sideways. Oh, is it going to be a false breakout? Is it not? Is it going to be a false breakout? Oh, notice how we're just going sideways through here, right? So we're in decision time. Is it going to be a false breakout, or is it going to continue down? We're going to be a false breakout. Is it going to be sideways? Oh, look at that. Oh, look at it. It almost broke back above it, didn't it? Notice all this sideways movement. It's still in that indecision time. Are we going to break back above? If we break back above, this is where it's likely to go. If we break down, this is where it's likely to go. All right. So if you're watching this unfold day by day by day, right? Because it's a daily chart on gold, you'll be watching this and preempting. Okay, if this happens, this is where it's likely to go. If this happens, this is where it's likely to go. It's such a powerful thing, right? So that's easy, Tiger, right? So let's keep going here. Boom. What is that? What is that? That's now what? A breakdown candle, which is what? Now telling us it's not a false breakout. It's actually now a downtrend. This is now not a false breakout. It was a true breakout, and now we're likely to continue. Now, sometimes when you get this breakout candle, guys, sometimes the market just does continue down. But if we start to see this forming, you're like, okay, then. So where's it likely to run to? We're likely to run down to these support levels here. And isn't that interesting? Look where it actually ran down to. It actually ultimately went down to this support level here, right? But it's not, the projection for me would be that there. That'll be the first level where it's likely to get down to. And then if it overshoots, we're likely to get down to the. I always say to my private clients that the market loves to run to the next significant levels there, the next significant levels. Next significant support and resistance levels. So that's where it ran through there. And then we ultimately actually continued down for a while, didn't we? And look where it bounced. What is this line here? Oh, that's that long-term line. Where's that long-term line? Oh, geez. What is that? Oh, that's that. That's that. Oh, okay, cool. We're still going. We're still alive. I haven't been looking at my screen, so I've just been teaching. So anyway, guys, so that's what I wanted to. That was that line through there. So anyway, guys, so that's what I really wanted to teach you today. I actually really wanted to walk you through just the FANG stocks, but I actually got into the whole teaching of false breakouts as well too, because the reason why we did that, if we go back to this, remember, go back to this weekly chart. Adobe is what? Could be creating some sort of a false breakout here. So there we go, guys. Hope you enjoyed today's session. Let me now go through and see what the chat box has been doing. And I've forgotten Netflix. don't be upset. Let's have a look at Netflix then. It's the same thing, right? It's the same thing here. So let's go through to here. So again, if you're looking at Netflix, what's Netflix doing right now? We have this long-term. So this long-term line through here is what? That's the long-term momentum support and resistance line, right? Long-term support and resistance line. And so we can see that through there, long-term support and resistance line. Let's go to the daily chart here for a minute. I'm just trying to get a good read on this right now. Yeah, that's the one that I'll be seeing through there. I definitely do know we definitely have a line coming down through here somewhere as well too. So more or less on the overall bigger picture here on Netflix, it's the same thing, right? We're still squeezing up into this level through here. So we had a big drop down through here, a big rally back up, and now we're getting that sideways movement as well too. So we can see that that's what's happening right now. So yeah. So once again, the same thing, BB. The same thing with Netflix, which is the same thing, which is majority of the FANG stocks, is that they haven't been doing much for the last 12 months, and they're in this squeezing off pattern. And I wouldn't be too surprised if this overall is forming a massive top. Now, it generally takes about a good 8 to 12 months, sometimes longer, to form a big, massive top in markets, because looking at the weekly chart here, and if we start to see a break above this level through here, we start to break below through this level through here, then I would start to see that the overall long-term momentum is changing. And isn't it interesting? It's fascinating how these markets work. Found support, found support through here as well too, and then we came down, we found a lot of support through here. Look where they came right back down to where this line that started in the middle of 2016. And then pretty much at the end of 2019, it found support there. So if you were trading this and you were looking at just this here and the market's coming down, like, hang on a minute, how come it found support through here? How come it found support and then took back up again? So the daily chart is very, very ugly, by the way. It's so BB, it's very, there's no clear direction with Netflix. It's just very sideways, very what I call meh, right? Meh is a technical term for just it's not doing much and there's no clear signal there. So that's what that's the thing about the daily chart. It doesn't look like it's going to break down. It doesn't look like it's going to break down all up. And the reason why is because we're just going sideways, right? The market's not really giving any clear signal here, or any clear sign of where's the more dominant in the markets there. Let me go. Josie, you actually asked some questions at the start. I'm not sure if you're still on, but I'll answer some questions for you now. Hey, John, how do you scan for mover every day? What's the process? Do you okay? So I answer that first question. How I do that? Well, my private clients, they get access to this as well too. That I subscribe to this software here called TC2000. This is the software called TC2000, and every day I go to this tab right here. And as you can see, this tab right here, I have a couple of different scans, and these I've got scanning codes, and I've created these scans. And then my job is to go, it goes find these stocks that are moving that day, that like are having a good up day or a good down day, and it's alerting me that that's having a good move. And then I've got to go through my job is to go through the process and find which ones are having a good breakouts and which ones are not. Sometimes a small list like this here, but I'm finding particular or specific type of moves in the markets. And so that's how I scan the markets every day. So I have my trading done pretty much within 20 minutes. So I look at the market pretty much sometimes, maybe 3 p.m. New York time. Sometimes I may even just open up the computer, 3:30, and then then I run my scans. And then sometimes within 10 minutes, I've looked through all these stocks. Nope, there's nothing today. No trade today. And then come back tomorrow and do the same process. Do you trade straight calls and puts? Yes, that's all I do. I don't write calls and I don't just trade those. I trade another instrument called a CFD as well too. But when I'm trading options, I simply just buy the option. The other reason why is because if I'm putting 5% of my account in the market at one time, I know that I can have a sleep at night factor. I know that 5%, that's all I'm risking. But a lot of the trades, especially recently, and Savage, you'll be able to testify this as well too, right? Recently, the last 3 or 4 or 5 trades that we've taken as private clients, those trades are run on for 200% and 300% returns, every single one of them. It's like within a couple of weeks later, it's like been phenomenal. It's been awesome. Now I haven't gotten that. I've gotten out pretty early, but that's the benefit of having that. And that's that risk to reward ratio that you try to always get. So I always try to, that's the one thing I love about trading that, because for me, it's all about protecting my capital. So if I say, okay, I really like this stock or I really like this trade here because it's based on my rules, so on and so forth, then I'm going to put 5% of my account on this option here. Now, I don't ever expect to have 100% loss. It happens every now and then, but I haven't had one this year. If I do get out of that, then I know a 50% loss is a big loss for me. Now, very rarely do I have a loss because I actually don't trade a lot. I'm not a very active trader. I trade very high probability, not high active trading. And from that process, I'm probably, if you're looking at that process, right? So if I trade 5% of my account on one trade, and sometimes it can go to 200 or 300% return, well, guess what? My account is now 10 to 15% on one trade. But if that's a losing trade, and even if it is a losing trade, right, I can get out of it. Even a 50% loss on that option for me is what? A 2.5% loss on my account. So if you look at those numbers, I'm risking 2.5% to then sometimes when the market does move for me, and we have a nice move, right? It's not always, but I'm risking 2.5% to potentially make 5%, 10%, 15% return on my account. I'm always looking to, even when I have a very high probability trading system, I don't ever try to load up. I always want to sleep at night. Like I'm in a trade right now. It's not about being right or wrong. I don't know whether it's going to be a profitable trade or not. I don't really care. I've only got, my maximum risk actually on this trade is 2.5%. So this is losing trades, like whatever. But it's not about being right with me. And where do you place your stops percentages wise? Oh, well, that's based on the JC. That's based on the trading system, my man. So whatever trading system you're trading, it's based on that. So it's you always place your stop based on your trading system, not based on where you just want to put it. And that's based on how the system works, where to get in, where to place your stop, and so on and so forth. So that'll be, again, firstly, you got to understand the setup you're looking for. And then from that, then you got to understand where to actually put the trade, where to actually put the loss there, the stop loss. San Diego. John, does psychology play a big role in the movement on price? I'm not sure about the psychology in the markets. There's a lot of things that causes the market to move up and down. But sometimes we can read the psychology of what the market is thinking, the overall market, by looking at the highs and lows. And if you've been watching this session here now, and I've been going for over an hour now, but it's pretty crazy. I know that from looking at the market can give you a good sense of the psychology of this. Like is this the big guys just pushing this into a false breakout and then they're likely to take it back up or break down or whatever? Or is the market been going down for a while and are we likely to start pick back up, so on and so forth? Savage. Oh yeah. Yeah. Does the Dow look like a head and shoulder? Do you always have a lower right shoulder after an uptrend? No, no, it doesn't have to be a right. It doesn't have to be a right shoulder, but I don't believe it's a head and shoulder. It's more like it's more like a triple top right now. So if you look at that weekly chart here, it's more like a triple top. The reason why is because these tops are pretty much even. You could call it a head and shoulder formation, but it's not. It's more like a triple top, which is still could be a topping pattern. Richie, the breakout bar mirrors the perfect trade setup. If it is also included with the 52 moving average pointing in the right direction, high volume, the breakout bar do normally take the trade. Richie, the answer to that question is I always take a trade based on the set of rules that I've got in front of me that meets that. Even if I do have the breakout bar, the 52 and so on and so forth, you probably watch some of my training. I still need to make sure that everything else lines up. Like I need to make sure okay, Richie, so you're saying the breakout bar mirrors the perfect trade setup. If the okay, so there's two different things here, Richie. Generally, if a breakout bar, and if the 52 moving average is also pointing in the right direction with high volume with that breakout bar, then do you normally take the trade? The answer to that question is that, well, it's on the false breakout scenario. The answer to that question is that there's two different scenarios here, right? You've got one which is a breakout, which is more of a continuation of a move. Because if the 52 is pointing in one direction, and you get a breakout candle with the direction of that of the moving average, then if that's happening, then that I won't take a trade based on that. That's more like a continuation, right? You're more like, that's not a false breakout scenario. That's more like a continuation of the trend. Because if the 52 is pointing and then you got the market continuing that direction, then and a breakout bar, volume, so on and so forth, then that's actually continuing. A false breakout is actually the opposite. A false breakout is a breakdown, then a break back up. So the thing is, Richie, is that when it comes to any system out there, whether it's a false breakout or it's a breakout candle with the 52 and so on and so forth, these questions that you have in mind, the number one thing that's really important to understand with your trading is that you just find something, one of these. It could be the false breakout I talked about today. It could be something else. But the answer to your question is, do you normally take the trade? I have a set of rules. I have 4 to 5 rules that I look at every single day when I'm placing a trade, and I need to make sure that those rules are met in place before I take the trade. So that's the only time I do take a trade. It's not just based on, breakout bar, volume, and then so on and so forth. It needs to make things, because you may get a breakout bar, volume, 52 moving average pointing in it, but it hasn't had enough time. If it hasn't had enough time, and it hasn't had enough time going sideways or enough time pulling back, that's likely to be a false breakout just by itself. So there's two different scenarios. The first quote there that you said to me is more likely to be a trend continuation, and it's more like that scenario there is likely to continue that trend. But the false breakout is that when the market does break up like that, and then it completely reverses. So I hope that makes sense. I'm just trying to get a gauge on that question there based on what you were saying to me. Is a triple top more bearish than a double top, or are they the same? They're all the same, really. There's triple tops. head and shoulder formations and so on and so forth. So um, they're not bullish or bearish. They're not bullish or bearish because the market is not really giving you any key sign right now that is it going to hold here and break up to a new high. That's a possibility. So we're still being going sideways. My thoughts and my opinion is that we're forming a top here because it's taken a good 12 months or more of going sideways. We know we're likely to head into a recession. We know the recession is just around the corner. So my thoughts, my opinion is that this is now forming a top and we're now likely to spend the next couple of years trending down from here. But it may not. We may rally back up for one more break up to all-time new high, create another false breakout. Then the market completely starts to go into a couple of year downtrend. They call it a crash, recession, all that sort of stuff as well too. So anyway, guys, so I started off with looking at the FANG stocks in this session today. And then I walked in through to false breakouts. And then just because I touched on that, I also wanted to touch on that as well too. Sideways bar, high volume, breakout bar, above resistance, 52. Nah, Richie, here's the thing, okay, Richie, I can see what you're saying in the chat box there. It's not just that, okay? It's not just that. I know you're talking about like the session that you're looking at here. The point of any system here, Richie, is this. Take what you know, right? Take what you know and take what you see and go back test it. Go back test it. See what the success rate is of what you know. Start to form something that you create your trading. You say, this is my system because I created it. And then what you want to do, Richie, is that, you just want to be able to be consistent because, Richie, there is no perfect system out there, right? There is no perfect system out there. The number one thing that's going to make any system out there, whether it's a false breakout system or whether what you're saying in the chat box right now, and it's you. It's how consistent, disciplined, and patient you are within that system. Because if you're not consistent at trading a system, and you're trying to pick and choose and trying to be right and all that sort of stuff, there's no consistency there, then you're not going to be consistent, right? So 90% of your success comes from that. So whatever system, whatever method you want to trade, whatever approach you want to with these markets, just be consistent at doing that. And that's when you're going to start to see more of a consistent result. And stop trying to be right on every trade. Stop trying to make money on every single trade because you're going to have losing trades every now and then. That's just part of the parcel. Have good risk management, and then go with that as well. So the whole purpose is that of any system out there, and maybe there's some of the stuff that you've seen with my stuff, is that go out there and test it. The way that I trade is that what you're saying there right now, you're probably seeing that from my free training, Richie, and you're right. But that's what you're saying there right there is probably a good maybe 50% of the way that I trade the markets myself. I have a complete step-by-step checklist to make sure that I'm getting into the best of the best trades. And from that there. Again, take what you've learned from anyone and start to test it yourself and start to build that solid foundation yourself within that system. Because once you start to do that, that's when you're going to start to see those consistent results, right? You start to build that consistency of long-term growth, long-term success. Here's the trade that meets my rules. I'm going to take it. This trade here could be a losing trade, so it could be part of the loss in the win-loss ratio. That's okay. It's part of the process. Oh, look, that was a losing trade. No harm, no foul. I protect my account. Cool. Next trade. Okay, here's the same thing. Here's the exact same setup I'm looking for. Take the trade, and so on and so forth. As long as you're consistent at taking that method, whatever you do, 90% of any trader success comes down to them as an individual. And that's the reason why most people don't do well, because there is no method of them getting in. And every single trade they take is because of something different. It's because the Fed, because of they think it's a top, there's support, so on and so forth. And that's 90% of your success there. Because you can take a system that has a 70% win-loss ratio, even with a 1-to-1 risk to reward ratio, like a false breakout scenario, and you be consistent at it and not do anything else, and you're going to make money. And so that's the approach that you want to be able to take within your trading, within any system out there. Take whatever you learn and make it your own, but don't look at the system and do all this testing and then trade it and then have one or two losing trades, say this system doesn't work, I'm going to go find something else. Because the approach, the foundational approach to your long-term success is you just being consistently long-term. And my success this year, I'm having an amazing year this year, is coming off the back of me just doing that. Every time I take a trade, say, you know what, I'm protecting myself. Like I'm in a trade right now. If this is a losing trade right now, my account's only my account's only down 2.5%. So I'm good with that. So that's that foundational. These are the foundational rules that goes into a trader. Doesn't matter what method you're trading, just be consistent at trading that, disciplined to only taking that, and patient. Sometimes you have to wait a whole week for a really good trade. Sometimes it might be you have to sit in front of the screen for 8 hours, depending on the way that you trade these markets. So anyway, guys, that's it. That's it for me today. Have an amazing day, and I will talk to you guys later.